Ruth, let me start with you. Is this all about real yield?
Absolutely, it is. And, it's the hunt for the real yields and what's going to outperform just before the world sort of dips into recession, so to speak. So Amundi, T. Rowe Price, the big names, Aberdeen, Fidelity, a lot of them are basically betting that risky emerging markets, particularly those in Latin America, still have quite a bit of juice in them, whether it's on the currency side, on the bond side. And that's just before global growth tanks and emerging markets see outflows, basically. Now, why is that? It's important to remember that a lot of these nations, from Chile to Mexico, and even some in Asia, like Indonesia, have really taken on the inflation fight much sooner than the developed market peers. So there's still a lot of demand for commodities as well coming out of China. It's a good recipe for emerging markets to outperform right now.
And Brendan, how much is it to do with just bargain hunting at this point?
Yeah, I think that's a really big component of this whole EM currency rally. I think evaluations are still relatively attractive in the EM space, and that's certainly attracting foreign investors back towards the emerging markets. And it's not only just currency that's looking for foreign investment, but it's also foreign currency denominated assets in the sovereign debt space, also on equities. So it's a component of valuations being relatively attractive across the emerging market asset class in totality.
So are you looking at emerging market currencies strengthening against the US dollar or some sort of outperformance? And what are your best bets at this point?
So we're certainly forecasting emerging market currency strength, but within that strength, we're looking for emerging market currencies to outperform relative to G10 currency peers. And a subsector of emerging markets, we're looking for Latin America to actually outperform within the emerging market currency context. And this kind of goes back to attractive valuations. It also goes back to elevated real interest rates. We're also looking at some country-specific developments where maybe local politics are improving or at least somewhat stable. So it's a combination of external factors, but also maybe some more idiosyncratic developments that can lead to Latin American currencies outperforming going forward.
What about the yuan as an EM anchor? Given that we continue to see, weaker and patchier data and narrowing rate differentials, is there potential for more of a drag there?
I think there is potential for a bit of a drag coming out of China. We're starting to see the economic rebound post-zero COVID start to mature a little bit, and maybe some of the rebound is not as strong as maybe we would have initially liked at this point. So maybe the EM Asia rally that we've seen over the last couple of months, maybe that's starting to lose a little bit of steam. But nevertheless, if we're forecasting broad dollar depreciation, that's something that can at least support the Chinese yuan and emerging market Asian currencies a little bit more broadly. But I would say that we do expect EM Asia to underperform within the emerging markets as some of the steam from the China rebound does start to fade a little bit.
Ruth, from what you've been looking at, what are you seeing as on the top EM currency picks at the moment in terms of what's being really traded by funds?
Yeah, absolutely. And I sort of touted this a little bit earlier as well. It's very much still a commodities-driven story. So in Latin America, a lot of the funds are bullish on the likes of the Mexican peso, the Brazilian real, the Chilean peso. And in Asia, although less so than Latin America, it's about the Indonesian rupiah, it's about the Indian rupee. Now, these currencies, remember, were absolutely clobbered last year when the dollar was, skyrocketing to record highs. But, they've been on a tear this year as that story has sort of reversed and US dollar exceptionalism wanes. And some of them are even posting double-digit gains as this commodity story continues.
And Brendan, you talked about some of those idiosyncratic risks. Of course, the Turkish lira is a whole different story. But you guys at Wells Fargo were actually thinking that Erdogan would retain office.
Yes, absolutely. That was our base case scenario leading into the election. And it's still our base case now. I'd probably say the probability of Erdogan retaining office is probably much higher now that we have the first round of voting completed. But absolutely, that was our base case. We're forecasting a pretty sharp lira depreciation as a result of Erdogan remaining in office. And we think actually as we get past the runoff election in a couple of weeks, that sell-off will start to materialize, and that can push the lira to all-time record highs against the US dollar.
Okay, more idiosyncratic news, Argentina, and we're expecting those emergency measures also and the key rate to reach, 97%? What's happening there?
So really, it's a combination of Argentina not being able to get out of its own way. Argentina has fiscal-related problems. It also has an inflation problem, and that's kind of forcing the central bank to raise interest rates as aggressively as they are. The problem with Argentina is really political, and we're going to have an election later this year where maybe some things on the margin start to change. But nevertheless, I think we're looking at a situation where, because the central bank has run out of FX reserves and credibility has essentially been lost from a policymaking perspective, the Argentine peso is probably going to be devalued post-election. So we're probably looking at a scenario where the Argentine peso again underperforms the entire currency complex, not just within the emerging markets, and again reaches all-time lows against the US dollar.